Welcome back, everybody. So this is going to be the watch list for Monday, June 2nd. And it's hard to believe that we are entering the month that is going to actually finish up the first half of the year. And it's been quite volatile. So let's start with the weekly news events that we have going on. So Monday morning, we're going to have U.S. manufacturing PMI 15 minutes after the market opens, as well as ISM manufacturing and construction spending. So definitely the first 30 minutes of the market tomorrow are going to be risk off. I would just let the data drop, see how the market receives it, and then we can position ourselves from there. But there's no sense in getting locked into a trade 10 to 15 minutes before news drops, and then the premiums just chop around and you get stopped out in a volatile move one way or the other. On Tuesday, 30 minutes into the market open, we have some important numbers. One, factory orders. So are factory orders continuing to be on the incline or the decline? Clearly, you can see that they are looking for a negative growth number in factory orders as manufacturing and retailers stop spending in light of a lack of clarity as to what's going to ultimately happen with tariffs. So I've commented on this before, is that no retailers are going to want to go out and pay tariffs. And then we see what happened last week where a court negates the tariffs and said they're not legal, so we're going to take them off. Then you get another court that comes in and puts the tariffs back on. So I think with a lack of clarity, more people are just going to be sitting on the sidelines. When it comes to job openings, we're going to want to see, are employers still hiring, or are they starting to slow down and hold that back? Otherwise, we just have some Fed speak. This hasn't really been too monumental. Now, mind you, Jerome Powell is going to be talking on Monday as well at 1 o'clock, but by then I'm hoping you should be long done with your trading and getting ready for the Tuesday market open. Wednesday, we have ADP employment numbers that are coming out before the bell. And then while the market is open, we have the final services PMI, the ISM services, and then the Fed beige book. So a fair amount of data this week, especially now coming into Thursday with jobless claims, the trade deficit, U.S. productivity, more Fed governor speak, and then finally, we will cap off Friday with all the unemployment data. So the U.S. employment report, the unemployment rate is going to hold steady at 4.2, which is what it's been doing before. Now, the overall income numbers came in better than expected for consumers last week, so I would be led to believe that this will still be within the actual range of what we're looking for. And then hourly wages. Hourly wages possibly ticking up a little bit more, which is ultimately inflationary because people have more money to spend. And then they'll be looking at hourly wages year after year, and then consumer credit. Well, we already know that consumer credit is on the rise, especially with buy now, pay later. It has really been escalating as consumers are struggling to make ends meet. Let's take a look at a couple of the charts. So when I look at SPY, we are, back to close to the all-time highs. I think we're only 3 or 4% away. We're just getting this, chop back and forth, up and down, really no clear direction over a longer duration period of time, right? And then we have where tariffs come off, tariffs come on, tariffs come off, tariffs come on. And it is just that whipsaw back and forth. But I do believe that we're going to be sitting here for probably the next couple weeks, just waiting to see directionally which way does the market go. Now, if you zoom out and go to a daily basis, right? I mean, the all-time high of the market was at 613. We're sitting at 589. I mean, we're not that far off. But then when you look, we do have a large gap below that if we experience weakness, which will predominantly be driven by the bond market. So while everybody is so focused in on what are stocks doing, you ought to be paying attention to what is the 10-year treasury doing? What is the 30-year treasury doing? So when we got a spook in the bond market, right, that's what helped fuel the sell-off to the downside over the last several days. And then as bond yields came down, the market started to move back to the upside. So overall price levels, I'm not making any changes. I'm not moving anything. They're all holding really strong. You can see all the way back here from Tuesday to where we were just on this past Friday. Coming down again, the court takes tariffs off. the president refutes it, gets the tariff stay lifted, and then we start to move back upwards as the news around China started to soften a little bit. So price levels aren't changing with SPY. I'll post them in the Discord every morning. Same thing, price levels are not changing with QQQ. I will post them in the Discord in the mornings. But same exact thing, right? Huge buying wick on Friday's massive sell-off. But we do have this really nice big gap below that will act as a magnet if the market should weaken on lack of economic indicators. But right now, we're just kind of between levels. Let it come down to the 517 range for a bounce, 519 for a reject. When we look at tech stocks, they're not actually performing very well whatsoever. Apple, we've been able to take a couple bounces here at the 200, and I think I was playing the 202.50s back up to this level. But you'll note we come down to this 199, we push up to 202, back down to 199, back above 202, fail 202, we come back down, right, 198, and then we are just bouncing off these levels back and forth. So Monday, if the market is relatively strong to neutral, I think you could take a call trade here at 200 and just go for like the 202.50s, or, don't go to the 205s or 210s, but just say, at the money in Apple, and that should work out fairly decent. Or you can go short if we start to see continued weakness. When I look at Amazon, kind of the same thing here, right? They're playing in these same ranges. 202, which is a fib bounce level from the all-time high to the tariff low, to my 203 number, 204, and we just keep oscillating back and forth. So you can see they get above it, they reject it, they come down, they get above it, they dip into the liquidity, dip into the liquidity, dip into the liquidity, and then just keep moving higher. So think about these as zones where the market could bounce, right, between price levels to actually move higher. But then if we fail them, we typically are heading back to the downside to the lower strikes. We do have a gap here on on Amazon. Let me also fix this. It was almost filled, and then the market regained some momentum. So when we take this candle low right here, we're at 196. So I'm just going to adjust this real quick so that we have everything in line. And there we go. So I do want to be cognizant of these gaps because the market will bounce off the top of them, or they, again, will use them as a magnet to actually fill back to either the upside or to the downside. Okay. Let's go ahead and take a look at Google. Google was actually in the news this week. They were doing their final court hearing about search engine and search engine optimization, and where they're going to have to open that up for a more open architecture. But you can see what they're doing, bouncing off this 167, which was an interim pivot. So what I will do during the week is, when I see that they are not respecting the price levels directly, but we're getting a violent reaction somewhere between, that's where you'll see my blue lines come in on a 15-minute time frame to show the bounce. And clearly, that's what they did here on Friday, May 23rd. And then again, if we fast forward to Friday, May 30th, that exact same area is when the market started to get some legs, bounced, and it went all the way back up to my level of 171. So we have very defined levels of 167, 168.43, 171.58, but we will also play within them. So puts below 171.58. The only bad part is, looks like there's a fair amount of buyers here, but if we had overall market weakness, I definitely think we can push down a little bit lower. Microsoft, let's take a look at that. We are at a level right now where we've just been constantly consolidating back and forth. But if we can get down to this 455 level, $4 below, I think you could definitely take some calls, or up here at 468, take some puts. But right now we're just really in between zones. We're kind of holding the Friday overall, Thursday, Friday market highs, right? So again, this is another great example where you can just drop a pin and color it blue, where you're watching that between zones, right? If we fail this, we go lower to 455. If we break this, we head up to 468. So keep an eye on that for Microsoft. Tesla got a pop with Elon Musk actually going out of Doge and back into Tesla to run the company. They ran it up and then they literally sold it off. So this 362 has been a path of overall resistance. I actually kind of like puts in Tesla. We are now below the 200-day simple moving average on a 1-hour time frame. If we go to a higher level time frame, you'll see that that is going to be significantly lower. But when I'm watching where we're at, I think we could, possibly push down to this 341, and then possibly down here to 335. We do have some sellers. We got a 4-hour candle close below the level. So that one I do actually like some puts on. And then we really don't have any buyers down here till, we get to this 2-hour time frame of 339. So we'll keep an eye on Tesla. And then we had supply forming on the Friday close. Nvidia had earnings last week. They ran it up and then sold it all the way off. So here's your earnings. They pump it and then nothing but selling all the way into it. So we are now back on a downtrend. Again, let's keep an eye on what's happening in the chip sector from the administration perspective in banning chips being sold to China, which is, a fair amount of business for your Nvidias, your AMDs. But right now, really, depending upon where the market opens, I like puts if we get back up here to this 430, 492 and then reject lower with a stop loss above probably this pivot high right up here at 135. So giving yourself a little bit of room, but the MACD and everything is pretty much negative to the downside on an overall bias perspective. So let me get that lined up and keep an eye on the chips if that continues to have some downward pressure. Same thing with AMD. When we're looking at AMD again, it ran up on Nvidia news, and then literally they have just been selling it all the way back off. We do have a big gap below here on AMD, so while the trend was moving back in an upward manner, they have definitely given the majority of all of that back. So I would look for forward pressure to the downside if we get a weak market. You'll see here we're pretty much balanced, so there's nothing for me to do. If we get down here to 109, maybe some calls, but we get up here to 111, definitely would be considering some overall puts. And then just the last one, it's kind of a light list this week going into June, but Palantir, tremendous amount of buying on Friday, and we pushed all the way back up to all-time highs, which are going to be up here, I think, at 135, if I'm not mistaken. Yep, 133 and change. So right now, I would not be looking for puts on this. What I would be looking for is, can they hold this 129.78 right here to take some calls to go to the all-time high? Or if they break below this, then going back down to 128. So we'll keep an eye on the overall news cycle. And again, I'll be posting commentary in the Discord every single morning, usually at about 5:30 a.m., along with my charts and what I'm looking at, what I'm watching. And then we will get together at 6 a.m. and then start live trading at 6:30. So if you'd like to join, the link is in the email, as well as 2 other links that you should highly consider. One is making sure you are using TradeZella to chart and track all of your trades. If you don't treat this like a business, then it is a hobby. And hobbies are very, very expensive in life. And you'll experience that with losses. So if you can't isolate what's working from what's not working through data analytics, then frankly, let's face it, you're just guessing and you're gambling. And then the other thing too is using the supply and demand indicator has just really helped me over the last 4 years to say I probably don't want to be shorting going into buyers, and I don't want to be going long into the sellers. Okay, it's not that you can't, and it's not that the market won't autocorrect in the opposite direction, but at least it gives you more visibility and clarity. So with that, everybody, welcome to June, and let's make this a phenomenal trading month, and I will see you all tomorrow morning. Take care.